think, even more interested in, let's say, creating some ideas. Prasen is our speaker for today. He's also already with us, Mark. Maybe, Mark, you can introduce a little bit what Faberflex is doing?
Yes, I can. Actually, we are a big printing company and mostly active in the advertising world. And as everyone else, or most businesses, we are impacted by COVID-19, and therefore diversified a little bit in something else related, but not exactly the same as advertising product, that is face masks. And well,
Let me show you.
I don't have the nice NTCC face mask with me. Okay, Hans. That's one of our nicest examples indeed that we did recently. And this is a product that for which there is demand. And I must say, actually, Hans, thanks to the event last week, we really saw noticeable increase in inquiries from companies, from people I met at the event and our people talk to. So it starts to get some traction.
Okay, that's great to hear.
Yeah, it's good. It's really nice. It's also a good experience for my young colleagues who are there, who are, well, different generation as we are, and much more focused on online sales and internet and using Facebook, that they notice that actually face-to-face, it works also. And,
yes.
And actually faster.
Yeah. I think you're spot on. Face-to-face, that sounds maybe for some generation a bit old-fashioned, but I think in doing business, and Prasen and I were just talking about how in the M&E world, if you don't have physical contact, it's not so easy to conclude business contracts. So we all hope that we can travel again. We all hope that we can physically meet again and conduct business in what we say old-fashioned way or old normal way or whatever way. Yeah. In the meantime, I see Bert van der Velde. Thank you for joining us as well this afternoon.
Hi there, sorry. I did hear you. I was still talking, that's why I muted myself.
Very good, very good. Welcome having you here this afternoon. We have a very intimate group. Bert, Prasen, our speaker from Mazars, is already here. Mark is here. Maybe Bert, in a few lines, what is ESWC doing in Thailand or in this part of the world?
Right. We have our headquarters here. So we are, although we are Dutch majority owned, 62%, all our activities are Asia based, and we do it out of Bangkok. Now, what do? We develop better vegetable varieties, genetics, and that results in seeds. We produce and sell. We do that all over Asia, actually all over the tropical world, increasingly in Africa and Central America. And we are a for-profit company, but most of our customers are what we call smallholder farmers. So the ones we see in Thailand, if you go up country at least, family-owned companies, small, but they provide us our food. And we know that all those sustainable millennial goals can only be met if we get higher productivities out of these smallholder farmers. So we are a for-purpose company, but we do make profit.
Good. Well, thank you very much for that, Bert. Prasen is, of course, very curious to hear from our participants, their backgrounds, etc. So thank you for that introduction.
And I'm here not because we are for sale, but maybe because one day we can buy a company. And your invitation came perfectly because I was just last weekend orienting myself on how did it work again, DCF and valuations, and it's been too long ago that I learned about this. So
good.
I mean,
no, that's nice to hear. Just in time management, we call it, I guess. Prasen is the expert, I understand, within Mazars and perhaps even within Bangkok. We'll wait a few more minutes because we have a few more participants who signed up. So if you bear with us, then let's wait 1 or 2 extra minutes before we'll start. Is that okay with you, Prasen?
Yeah, absolutely fine. Thank you.
By the way, Bert, we haven't seen each other for such a long time, but I will show you our NTCC mask. It might be some inspiration for you.
famous design. Sorry, I was muted. Yeah, what's the Rietveld?
Rietveld, the famous Rietveld designer, and compliments to Mark de Hartog, who is also in this webinar, for the creativity and the production of these masks and
Great.
keeping our membership safe.
Thank you.
We distributed 200,000 masks in Indonesia alone. We shipped them out to the provinces, also with our own logo. But unfortunately, I just have a whatever fashionable thing, not with our logo on it.
No. Okay.
Well, we can help you with that.
Yeah, I'm thinking. I just looking at your favorite flag, so maybe we should talk a little bit. Yeah.
Yeah.
I really wonder why we only did this in Indonesia. We have even bigger business here in Thailand. Mm-hmm. We've done other corporate social responsibility things, but let's talk. Yeah, why not?
Good. Everyone, thank you very much for joining us this afternoon. I see we have 11 participants right now, and it's 5:05. So we would like to officially start. If I first may ask everyone to mute the cameras and the microphone for an easier live streaming, that would be great. This afternoon will all be about the COVID-19 and the impact on cash flow and the particular business valuation. This is a topic for specialized interest. So thank you for the ones who have joined us. We have a small intimate group that makes hopefully a Q&A also interesting. For Q&A, we would like to keep you these questions until the end of this presentation, where we will have ample time to address these. And maybe because of the relevance of this particular topic, you want to ask your questions in private to Prasen directly. That's of course also fine. And we'll make sure that everything will be redirected as soon as possible. As I mentioned the name Prasen, hopefully you have read some part of his bio, his very interesting bio, but I'll just highlight a few points. Prasen focuses on the creation of the M&A service lines within financial advisory services here in the Bangkok office of Mazars. He is also involved in transmission operation in a wide variety of sectors. That's nice because in our membership we have sectors like agri-food and healthcare, education. We just had a nice talk about how education and the interest in education is increasing in this part of the world. Apart from that, he holds a bachelor in accountancy and economics, master's in finance and MBA in finance and marketing as well. So I think we can safely say we have an expert with us. Prasen, thank you very much for sharing your knowledge. This is a great opportunity for the NTCC members who haven't yet seen you, because I think this is now the third or the fourth presentation you are conducting within the business community. I was told at the French Chamber and perhaps also other chambers. So thank you for being with us this afternoon. And if I may finalize a few more words. I remember when COVID really got heavy in, let's say, media attention by middle of February here in Thailand. We had your managing partner, Rob Hurenkamp, from Mazars, giving the first webinar for NTCC. And that was all about cash and cash flow and how to control your cash flow. And I guess what he said 4 months ago is still probably very relevant, because I think cash is king. And I guess, Prasen, that would probably also be part of your presentation. But I don't want to disclose too much. I would like to offer you the floor and the audience. So up to you, Prasen.
Thank you, Hans. That's a great introduction. Thank you very much, NTCC, and thank you everyone for joining this session. Yes, we are going to talk about COVID-19 impact on cash flow, business cash flow, and business valuation. That's the most discussed topic over the last 6 months. All the businesses are concerned about managing the cash properly. As we all understand that cash inflow and cash outflow, these are the two key things for every business. Cash is a backbone of business, and we need to have a strong backbone for all the business. to survive the business, to continue, to have a going concern concept alive in our business. So yeah, let's discuss. We will be more focusing on how this cash flow is impacted, and when your cash flow is impacted, how your valuation is impacted, and what would be the key areas to look at when you evaluate your business during this current situation. Yes, I'm with Mazar. I'm leading the financial advisory services, primarily focusing on M&A, doing transactions, helping our clients, either buying or selling companies or raising capital, primarily through equity, in Thailand, and also focusing on Southeast Asia. So I have a broader role, not only for Thailand, M&A for entire Southeast Asia. Okay, so to start with, in order to understand that how this COVID-19 really impacted the business cash flow, we Mazars have done a survey with all our global investors who are from different who are managing different funds. For example, venture capital fund, leverage buyout fund, distress fund, to understand that how their portfolio companies were impacted during this period of time. So if you look at the slide, left side, the pie chart, that gives a idea about the responded to the survey. So you can see that 38% and 36% of our respondent were from venture capital fund and growth capital fund. All these funds, they manage their portfolio companies from various sectors, manufacturing, airline, hospitality, education. So it's quite broad sector portfolio companies that these funds are managing. Based on their responses, we understand that all their portfolio companies are impacted, their revenue are impacted due to this COVID-19. And if you look at this red bar, it says that around 89% of the respondents says that their portfolio companies' revenue were impacted up to 50% during this COVID-19 situation. They have also mentioned what would be their focus for next 12 months. As we understand from their responses that 45% investors would be focusing on new opportunities and acquiring business. That is simply because of, when your revenue is impacted because of there's less demand in the market, they want to take the opportunity to scale up their business by acquiring new business opportunity. At the same time, 24% respondents said that they will be more focusing on managing the risk. And 24% respondents said they will just run their business as it is. So there will be no change in their business. It's a quite interesting feedback that we receive from our global investors that we work with on a regular basis. Now, if we really need to look at what are the key impact in the cash flow, the first impact that we will talk about is the generations of cash flow. As we understand that due to this COVID-19, obviously there is a bit of uncertainties on the cash flow generations. It become more skeptical over the period of time, and time is going to be going to play a crucial role going forward, because that's what we believe, that the fundamental variable that is going to determine the ability to generate cash flow for your business is basically time. So that's why we also note that a lot of investors right now who are actively looking for investment in Southeast Asia, emerging economy like Thailand, Myanmar, Cambodia, or other region, they are taking time to make their investment decision. That's simply because everybody is cautious and they want to see how market reacts, how economy reacts after this COVID-19 situation's over. We are getting out of the situations, but we are still in, we still in uncertainty that what is going to happen. So time is going to be going to play a very crucial role. The second point is variable growth of business. Obviously, as we understand that higher expected growth for our business is always gives us a higher value of the business. So when we need to determine what is the value of our business, we always look at that what is the future of the business, how much growth we can get from our business, and that's how we calculate a present value of our business and we get a value of the business. But there is there's an uncertainty on the variable growth opportunity for our business. It's hugely or significantly impacted by COVID-19. For example, in last 20 years, we have noted that in China, the retail industry grew by 8%. But during this COVID-19, within 4 months, the retail industry dropped by 20%. So there is a vulnerability in the market, and that is only due to the COVID-19. Now, when we are probably going out of the COVID-19 situations, there are a lot of discussions going on. How would be the recovery, whether it would be a V-shaped recovery, whether it would be a U-shaped recovery. But I think, the first point that we discussed, we still need to wait. We still need to give more time to see how the recovery would be. In June, we saw that there's one retail store in China opened, and they did a sale of $2 million in one day. So it is not going to be sustainable. It is just for a day, maybe the following days or after 1 month or 2 months, the retail industry may not see the same growth that they saw in the first day. So patience and the time is very, very important going forward. The third is new variable risk. Obviously, a new risk we found during this pandemic, and that has impacted our cash flow very significantly. And we need to be prepared because there are a lot of discussions whether there will be a second wave or not, or in future similar type of crisis may impact the business and the economy. So we need to prepare for any new variable risk. And as we understand that the higher the risk is, the lower the value. So when your equity investor feel that there is a significant risk in the business, obviously their expected rate of return increase, which we'll talk later on in the slide. And if there is a new variable risk, obviously the expected return of the equity investor will be higher. They will be more cautious before making the investment. So these are the 3 key points that we saw COVID-19 impacted in the business when we talk about cash inflow or cash outflow. Now, what would be the key areas going forward that every business should be very careful while managing the liquidity in the business? Obviously, every business is exposed to some statutory payment, and those statutory payments are basically your payment related to the payroll and benefit, corporate taxes. During these crisis situations, few government obviously give some incentives related to payment of the corporate taxes by extending the timeline. But at the end of the day, you need to make the payment. And payment to suppliers and the creditors, that is very important. If you don't make your payment to your suppliers and the creditors on time, the business can even get into an insolvency. So these are the statutory payment, and we need to have sufficient liquidity or cash reserve to make this statutory payment, and that sufficient reserve should be for a sufficient period of time because we really don't know that when this crisis happen and how long it takes to recover. For example, it's been 7 months, we are in COVID-19 situations, and we are still skeptical about the future. The second thing is unforeseen risk management. So we also need cash to manage any new risk that may occur in the business, because when you get a new risk in the business, when you are in the crisis situations, you need to restructure your business more often. You need to look for an alternate business plan, and to do that you need cash in hand. So it is always advisable that you plan for your liquidity management, your cash management in a way, sitting with your advisor, that you cover all these areas, so you have a sufficient liquidity in the business. When you are in the crisis, you know what to do, how to do the restructuring, or looking for alternative business plan with a sufficient cash in hand. The third is positioning for future. I think that is most important, and all the business men, they're asking these questions to themselves, that what will happen after this COVID-19 situations over. As there's a pressure on the cash inflow, cash outflow, your fixed costs are there. You may tweak with your variable cost, but as your cash inflow is less, you are using your all the reserves that you have. So when these situations over, how you going to place or be in the market? There will be a demand, but how you gonna serve those demand? Whether you will have sufficient money to go back to the previous productions level to meet the demand in the market, or if you need to enter into a new market, how are you going to do it? What is your capital management? How are you going to raise money? Where you going to fund, arrange your fund to sponsor those expansion? So how are you going to position yourself in future when this crisis is over? That is also very crucial and important area to consider, and you need to prioritize your cash flow accordingly. So, looking at what are the key impact in your cash flow, and what are the key areas, or what are the key cash outflow which needs to be prioritized for every business, not only during any crisis or in a normal course of the business. I think the biggest lesson that we got during this COVID-19 is we need to go back to basic of our business more often. We need to see that our fundamentals are really correct or not. I was just talking to Hans, before starting these presentations, and I was sharing my experience that recently we are reviewing one of our client business, which is into business for 30 years, and they work based on a project basis. They're into construction business. They get one project, they do the budget, and they deliver they execute their project, they get the cash inflow, and they're profitable. But for last 4 to 5 years, their business was not making money what they expected to make. But during this COVID-19, that came out that highlighted very well because of this pressure on the cash inflow. And when we actually went and we see that there are some terms and conditions with their suppliers where they can get some discount, like 2%, 3% discount, by just making their payments 4 or 5 days before the day they actually make the payment, and that's actually in the terms or in the clauses of their agreement. And when we actually sit with the client and we review those clauses, and we actually thought that, okay, if they make their payment to the suppliers before 15th of the month, they can actually get a 2% or 3% cash rebate on the payment. And each of their invoices is like $50 million, $60 million. So they're easily, saving millions of baht over there. So, and that's a great lesson that we learned, and also our client learned, that okay, we are overlooking these things because when the market was good, when business were good, probably nobody cares about that. But now this is a time we need to go back to the basic. We need to look at our fundamentals of our business and see where we can save our money very carefully. Now, when our cash flow is impacted, obviously, as I started saying, that your business value determines basically based on the cash flow of the business. If you have a good future growth in the cash flow in future, your present value of the business looks good. And I think after these crisis situations, all the businesses, they will learn to evaluate their business value on a periodical basis, which is very important. We need to do the valuation of our business at least on a yearly basis to see where we are standing, where we are 1 year before, where we are now, and where we're going to be. Now, when you do this valuation, what are the key areas that you need to be very carefully consider? The first is date of the valuation. Date of the valuation is basically the date at which you calculate the present value of your business based on the future cash flow or your projection. And this date is very important because, for example, if you are valuing your business today, but considering a date of valuation 31st December 2019, maybe that projections that you prepared before 31st December 2019 may not include, the crisis, COVID-19 crisis, and your 2020 financial may be very optimistic. But if you do the valuation date considering 30th June 2020, maybe you already have your actual financial for the first half of 2020, which obviously had an impact from this COVID-19. And then you revised your projections for the second half of 2020, which will be more conservative, and maybe for the next year. So determining the date of valuation at which you need to get the valuation done for your business is very crucial. That for a simple reason is that includes the, all the potential risk in the business and more realistic financial projections going forward. The second important point is cost of equity. As we all know that cost of equity is basically the reward for your equity investors, and equity investors always try to see that, what are the key risks in their investment. They include their, country risk, they include the business risk, they include the industry and sector specific risk. For example, if any investor is now investing in hospitality sector in Thailand, probably they will expect much higher return now because, that's the sector is mostly affected. So as go for like airline sector, these are the sector which requires now more premium, or in other way, the equity investors look for much more return at this stage. So basically we need to see that the cost of equity, when you calculate your cost of equity, the risk-free rate that you need to include, whether that risk-free rate is actually a default free or not. The next point is double counting on risk. As during this point of time, we are talking about risk, and everywhere we are getting so conservative, considering all these risks. But at the same time, we need to be very careful that when we are talking about risk, that should not be, double counted. For example, when you are preparing your financial projections and you are considering a very conservative growth for your business for 2020, even for 2021, because there could be a additional risk which may comes up from the second wave or whatever the reason. And at the same time, when you calculate your discount rate for your valuation, you should be very careful that if you allocating the risk which you already consider under financial projection, you should not give that same priority while considering the calculating the discount rate. Then probably you will get a very lower value of your business, which may not be the right picture or right value of your business. So be very careful while calculating the risk of your business and allocating the risk in different parts of valuation. The fourth point is discount for lack of marketability. I think this is a very important point at this point of time. I heard people saying, a lot of people saying that investors now prefer to invest more because business value is decreasing. So there is a lot of distress asset. I like to disagree on this comment when I hear from people, because it may not be applicable for every business. It may not be applicable for your business. Okay. For example, as I mentioned, that hospitality industry, hotels, properties, yes, there is a big impact because there is a less tourist in Thailand now. Aviation sector, yes, because all the airline companies, they are not flying with their full capacity, they are not generating money at this stage. But what about telecommunication industry? It is not, right? Because telecommunication industry, now we are all dependent on telecommunications, internet, we are doing all this video conferencing, we are all this, making the presentations and all. And we have seen that in the last 6 months, actually all the telecommunications across the globe, their sales has increased. So do they also expect to have lack of marketability a discount for lack of marketability? No. So when you do a valuation, particularly for, when you are talking to any potential investors to raise fund, be very careful, assess very carefully that whether your business, the sectors it belongs, it really, expect to have a discount or a premium other way. So please carefully assess this point. The last point is government support or incentives. Yes, few countries we have seen the government has given various support to, particularly to the SME. For example, in Thai government has given some financing to the SMEs, or tax extending the tax deadline for the payment of the statutory tax. So those incentives should be considered well when you prepare your cash flow, and that will probably impact your cash flow and business valuation in a very positive way. So yes, these are the key areas when you need to perform your valuation, and which the areas that you need to look for. And one thing that we learned from this situation, that it is always better to go back to the basic on a periodic basis and see whether our business fundamentals are correct or not. And if there is a need to sit with the consultant to see that how to rectify the business fundamentals on a periodic basis, to which will enable you to achieve your objectives, business objective. So thank you very much. If you have any questions, I would be happy to answer those questions.
Thank you very much indeed, Prasen. This is quite a high level, let's say, overview of the aspects you need to consider. I can assume for each and every participant, they might have some specific questions relating to their own sector or their own companies, or their investment opportunities they have in front of them. If there are any questions from the audience, please feel free to ask them now. You are also okay to unmute your camera if you wish to talk to Prasen or the audience yourself. I'll wait another minute before we will see if there's any questions from the audience. But like I said, we can also always make sure that we have questions later on a one-on-one basis. These slides, with your permission, Prasen, we will share amongst the audience today, as well as the recorded version. That's okay. I see Bert is opening up his camera again. Bert, does that mean you have a question?
Yes. Thank you first of all for the very nice overview. And indeed, I will not make it too specific. That gets boring, I think, for the outsiders. But maybe at a later stage we can actually meet in person. But some general questions. The 45% of those investors that are ready to acquire, to invest, is it not so that, and maybe it's a bad word, but it's not meant like that, that there are vultures, vulture funds waiting for valuations to come down, that are basically bottom fishers, and of course, timing is crucial, as you also say, but it's quite likely that the actual economic impact has yet to be seen in a lot of companies, so that that is quite smart of them to wait it out a little bit. What do you think of that?
Yes, thank you. I think that's a very good point, Bart, that you raise. And I completely agree. If you historically look at, 1997 crisis, 2008 crisis, there are opportunistic, investors who took advantage of those situations, and they made a lot of money. They made a lot of money out of this situation. But again, I would say, that's why I said that, be very careful while you value your business, that your business really deserve a discount, and that totally depends on which sector your business from. In my opinion, in last 14 years, whatever I learned, that whenever there is a crisis, the first sector which get impacted is the property and real estate sector. And if you really look at all these people that you are talking about, the vultures, they probably made money out of that sectors particularly, right? Again, it depends which sectors you're from, your business is from, your business is operating, and accordingly you need to value. Yes, that is also true. There are investors who look for, obviously, always, whether it's a crisis or whether it's a not crisis, investors always wants to invest low and sell high. So, but when you do valuation of your business, you need to have a sufficient justifications that why you deserve this value. Whether it's a high or low, it doesn't matter. You deserve something. Why? If as long as that is justifiable, I think the investor will also understand that, because at the end of the day, their fundamentals are also correct.
Yes, no, I fully agree with that. Also, the future cash flows, because often these models, they are presented as scientific truth, but of course they always depend on the assumptions underlying, on the story of the expectations. And history is only, to some extent, a good have a good prediction value. That retail example you cited from China, 20 years, 8%, that's an average. But I guess if you pick out Tiananmen Square that year, there was also a significant dip. So if you would be a seller, you could say, look at that history. Yes, there was a dip then, but don't look at the minus 20% now. The opposite is actually true for our sector. We are in the very input sector of agriculture, and seeds throughout the world have performed extremely well the first 6 months. A combination of lots of factors, some poorly understood, like people have hoarded toilet rolls and they also buy seeds because they have a feeling that producing your own food is sort of a psychological reaction. And that's really happening. We feel that. But if I would be on the buying side and I would value my company right now on this high, on the buying side, I would ask critical questions. This is not, what is the story behind those cash flow forecasts? So it goes two ways. The DLOM, you say, is that warranted? But also the upside, is that warranted? The variability goes up. So with that, the risk goes up, the beta goes up. Yeah, and I think, so that's why I'm always a bit, the models, you need them for the backgrounds, the financials, but I rather zoom in really on the story and the assumptions.
Yeah, you're absolutely correct, Bert. And the way, I have my own version of seeing valuation. I always say, valuation is not a science, it's an art. How you do valuation, it's totally depends on how you perceive the business. I know there are a lot of consultant I have seen, with this experience, that you go and you talk about, okay, I am, my business is in agriculture, I am generating this million revenue, my profit margin is 20%, 30%, and they will straight away tell you, okay, you can expect to get this much value of your business. I think that's a very wrong thing. You cannot really determine the value of a business without learning about the business, without perceiving the business. It depends a lot of things. You can say 10 million for your business, I can say 15 million. As long as I have a proper justification, I have a proper graphics to portray that, yes, this 15 million I can really achieve. I think, yes, it's 15 million. So valuation is, always depends on, it's not a science, it's more of an art. How you really perceive the business, how you really understand the business, that is most important. And when you appoint a consultant to do your valuation of your business, the consultant needs to understand, they need to step into your shoe and they need to see that whether they really understand what you are doing or not. Then only they can give you a fair market value of the business, right? We call fair market value. So without learning a business, without learning the underlying truth of the business or the assumptions of the business, it's very difficult to determine the F&B of the business.
Yeah, I fully agree. And also knowing the audience, the prospective buyers, because they might have strategic reasons why they want to go into this company or this sector. And you can pitch to that, and that might, to a great extent, influence the valuation. So yes, you need to know the business and the audience, the person, why is he interested? And financial investors maybe are a bit more neutral, but strategic investors are not.
True. I mean, when you go for an investor, you also need to see what impact they're going to make to your business. The value also may be, you know, driven by that angle. If a strategic investor going to expand your business operationally by, you know, putting their operational capabilities, that is totally different when a financial investors just give you a money and play a passive role, not taking any charge of, you know, contributing to expanding the business. So these two dimensions are different, right? So you need to be also be careful. That's a very good point, Bart. Thank you for bringing that out. You know, any business, if you're looking for a strategic business, a strategic investor, you need to assess different parameters when you are looking for a financial investor, because financial investors are mostly giving you a financial support and then play a passive role. They are not active in the business. They just see that after 5 years, they're getting 18% IRR or not. If they don't get it, they will just exit. But strategic investors are there to be with you longer term. Operationally, they want to, you know, expand the business. So a lot of things. Well, I don't want to offend any financial investors. There are financial investors who also bring operational capabilities, but you need to assess when you are in talk with any investors that what is the background of the investors and what they really intend to do with your business.
Yeah. Thank you.
Thank you indeed. Thank you, Bert, for raising these questions and giving your observations. We have Mark de Hartog, who also has a question for you, Prasen.
Yes, Mr. Prasen. The question I had is, do you on your side, do you already see an increased activity in the M&A sector? Like the people in the vulture funds are mostly called like the smart money. Are they active already, or are they still waiting? Is it still too early according to their estimates? Do you see any increased activity?
I see a mix of responses now. I see there are some investors who are getting active in real estate and property sector. They're looking for a lot of asset because they believe the value of the asset declined. And it has declined, particularly in few countries like Thailand. I think the value is a bit declined, so they are looking for a proper, you know, asset. I really don't focus on real estate, property, or hospitality sector. My focus is on education sector, as Hans said that, and I see that there are a lot of investors who are interested in education sector to put money. They also, you know, there are some investors, they believe probably this is the right time because the valuation has, you know, gone down because all the schools or colleges are closed. They are going for online education. But this is not really true, because, you know, education is something which really don't depend on the crisis or anything. You need education, you need quality education. And if there is a good asset which provide quality asset, that asset really deserve the value it needs, right? So to answer your questions, I think there's a mix of responses in the market. Few investors who depends on the sector, which sector they're focusing on. But yes, there are a lot of distress asset in hospitality, in manufacturing sector, and I see there are investors who are looking at those assets. Yes.
Thank you.
Thank you indeed. Are there any other questions? We still have time for one question, one relevant question perhaps to add to this discussion. If not, then I might have a question myself, Prasen. You touched the subject of certain sectors. You have a huge amount of cash and you're intending to invest. Can you name 2, 3, let's say, sectors where, despite COVID or maybe due to COVID, long term, you would put your money on, which might be an advice for the audience as a takeaway point?
So it's a question for me?
Yeah.
Okay, okay, that's a very good question, Hans, actually. I needed some time to think and react on the question, because I wanted to put it how the best way I can put it. I see, in last 5 years, there is a trend of startup companies, right? There are a lot of startup company, and I just learned that Bangkok has probably one of the highest number of startup companies in Southeast Asia after Singapore. Uh, and one thing I find that all these businesses are basically focusing on cash flow. So what I mean by cash flow, they believe in cash in and cash out. So they are really not focusing on building real asset. When I say real asset, it means fixed asset, which can give you additional cash flow during a crisis time. If you go to 30 years, 50 years back, all the big conglomerates which made their fortune, they always did that. They build a real asset for their business, and they are still surviving now, even during the crisis situation. So if I have such money, I will look for those businesses which business has good potential for backward integration. So I can protect my core business, backwardly integrations the business properly. So even during the crisis period, my core business impacted, but I have a sufficient support with my backward integrated business, so I can survive. So I would be more focusing on investing in those businesses which I can do more backward integration and create a real asset. That would be my focus.
Thank you for sharing that with us. That might be a tip for one of the audience who was considering something in the similar lines. If there are no more further questions, and we are within time, 45 minutes as we agreed, I would like to say a great thank you to you in particular, Prasen, and of course the audience zooming in this afternoon. Again, if there are any other questions or you would like to receive the presentation slides, please reach out to us. That's why we are here for. The NTCC is happy that we can already organize live events, live in physical environment. What we have noticed in the last few weeks is that most of our members are happy to reconnect again over a good conversation and perhaps a glass of Heineken and white wine. If you want to join us, that will be on the 3rd of August, the next upcoming event here in Bangkok. But I see we also have one of our members from Chiang Mai, Pim. We'll see you on Friday 31st, so next Friday in Chiang Mai, because we should not forget also the region. It's not only about Bangkok. So there are ample opportunities to reconnect, not only in this environment physically by webinars. We'll continue organizing hybrid events in the coming weeks and months. And final thank you again this afternoon for zooming in. Thank you for the support for the NTCC. Thank you, Prasen and Mazars team, for helping us this afternoon and sharing your knowledge. Bert and Mark for asking the questions. And I wish you all a lovely rest of the evening. And for the ones who are enjoying a long weekend, a domestic holiday, safe trip up north, up south, going wherever you are. Stay safe and hope to see you soon again at the NTCC. Thank you again. Have a good afternoon.
Thank you, Bob.
Thank you.
Okay, thank you.
Bye-bye, everyone. Bye-bye.
Bye.